Once upon a time in China, a colossal project was born that aimed to connect continents, countries, and cultures. They called it the Belt and Road Initiative, BRI, and its vision was to recreate the ancient Silk Road, transforming global trade and development. But the path to glory is often riddled with peril, and China's ambitious endeavor is no exception. Like Icarus, who flew too close to the sun, the BRI is now facing the heat of a mounting debt crisis. Before starting, make sure to click the like and subscribe buttons to stay updated with the latest content. The plot thickens when you consider China's own debt crisis, which casts a looming shadow over the nation's economy. With a debt-to-GDP ratio exceeding 380% by the end of 2023, China's debt situation is like a ticking time bomb, waiting to explode in a spectacular display of financial fireworks. The BRI, in its ambition to weave a tapestry of interconnected infrastructure across the globe, has inadvertently entangled itself in this web of debt, creating a precarious situation for both China and the participating countries. But what is the BRI, you ask? It's a tale of epic proportions, with a cast of over 100 countries, billions of dollars in investments, and a stage that spans Asia, Europe, and Africa. The BRI is the brainchild of China's leader, Xi Jinping, who envisioned a network of ports, railways, roads, and pipelines that would unite economies and foster trade and development. It's a story of grand ambition, high stakes, and potentially world-altering consequences. And yet, as the BRI's wings begin to smolder, the question remains: will it soar to new heights, or will it crash and burn, taking countless economies down with it? To answer these questions, we must first answer some others. First, let's take a look at the rising debts crisis in countries participating in BRI. Numerous countries eagerly embraced the BRI, starry-eyed and hopeful for the prosperity it promised. Little did they know they were boarding a train ride that might lead them straight into Debtville. Take, for instance, the small island nation of Sri Lanka. Their starry-eyed dreams of a bustling world-class port led them to embrace the BRI's generous investments. Alas, reality proved to be less than kind, as the Hambantota port, once hailed as the jewel in the crown of Sri Lanka's development, turned into a veritable albatross around its neck. Unable to repay the mounting Chinese loans, Sri Lanka found itself with no choice but to lease the port to China for 99 years, a move that sent shivers down the spines of geopolitical analysts around the world. And Sri Lanka is not alone in its plight. Pakistan, a close ally of China, finds itself ensnared in the debt trap as well. The China-Pakistan Economic Corridor, CPEC, a flagship BRI project, promised a cornucopia of opportunities and development for the South Asian nation. Yet the price tag proved too steep, and the CPEC's hefty loans now account for a staggering 10% of Pakistan's total external debt. It seems that, in their quest for prosperity, these countries have unwittingly signed up for long-term debts. The consequences of this unsustainable debt on these countries' economies can be likened to a relentless game of Jenga, where each new loan teeters on the brink of collapse, threatening to bring the entire edifice crashing down. Overwhelmed by debt, these nations face reduced credit ratings, fiscal strain, and increased vulnerability to external shocks. In turn, their dreams of development and progress are left to wither on the vine, replaced by a gnawing sense of regret and the bitter taste of disillusionment. Indeed, the BRI's trail of debt-laden countries stretches far and wide, a testament to the hubris that often accompanies grand ambitions. But as we continue to explore the unfolding drama of the BRI, we must ask ourselves, what factors contributed to the failure of the BRI? First on our list of factors is the lack of transparency and accountability in BRI projects. Cloaked in secrecy and shrouded in mystery, the BRI's modus operandi has raised eyebrows among the global community. From closed-door negotiations to the murky details of contracts, the BRI has been accused of playing a high-stakes game of smoke and mirrors. This dearth of transparency has led to accusations of corruption and cronyism, further tarnishing the BRI's already sullied reputation. Second is the unsustainable financing models employed by the BRI. Like a financial Frankenstein, the BRI stitches together a patchwork of loans and investments that often leave participating countries shackled to mountains of debt. These financing models, typically characterized by high interest rates and short repayment periods, have led many countries to question the true cost of their BRI dreams. As the saying goes, there's no such thing as a free lunch. And for some countries, the BRI's banquet has left a bitter aftertaste. Another huge factor is the geopolitical tensions and concerns about China's growing influence. The BRI, like a spider spinning its web, has extended its reach far and wide, ensnaring countries in its intricate network of infrastructure projects. But in doing so, it has also ignited a firestorm of geopolitical tensions, with critics accusing China of employing debt-trap diplomacy and neo-colonial tactics. The specter of China's expanding influence looms large over the BRI, casting doubt on its true intentions and stoking fears of a new world order. As the BRI teeters on the brink of failure, what exactly would the fallout look like for China and the global economy? The potential failure of the BRI would undoubtedly send shockwaves through China's economy, leaving it nursing a financial hangover of epic proportions. With billions of dollars poured into ambitious infrastructure projects, China's pockets might suddenly feel a lot emptier. As if that weren't bad enough, its global reputation would take a serious hit, with the BRI's collapse painting a picture of China as an unreliable partner in global development. In short, it's not a great look for the world's second-largest economy. Now, let's examine the potential impact on the world economy, particularly the developing countries that have eagerly jumped on the BRI bandwagon. For these nations, the collapse of the BRI could be akin to pulling the rug out from under their feet. Many have pinned their hopes and dreams on China's grand vision, hoping to ride the BRI wave to newfound prosperity. Should the BRI falter, these countries could find themselves saddled with white elephant projects, burdensome debt, and dashed dreams of economic transformation. But wait, there's more. The potential failure of the BRI also risks destabilizing global economic growth, as countries that have invested heavily in BRI projects may face financial strains and decreased investor confidence. This ripple effect could spill over into other economies, creating a domino effect that sends tremors through the global financial landscape. It's a sobering reminder that in today's interconnected world, the fate of one ambitious initiative can have far-reaching consequences. All right, so we've painted a pretty bleak picture of the BRI's potential collapse and its far-reaching consequences. But in truth, all is not lost. Let's explore some strategies that Xi Jinping could deploy to salvage this ambitious initiative. First up, China could start by addressing the glaring issue of transparency and accountability in BRI projects. By opening the curtains and letting some sunlight in, China could foster greater trust among its international partners. This would involve sharing detailed project information, fostering open dialogue, and engaging in third-party evaluations. In other words, it's time to leave the cloak-and-dagger antics behind and embrace the power of openness. Next on the list is implementing more sustainable financing models. For the BRI to have a fighting chance, it's crucial that China moves away from debt-fueled investments and instead seeks out more responsible lending practices. This could involve partnering with multilateral development banks, promoting public-private partnerships, and implementing debt sustainability frameworks. After all, a financially stable BRI is a happy BRI. Xi Jinping could also focus on strengthening diplomatic ties and addressing geopolitical concerns. By engaging in open and honest dialogue with other nations, China can work towards alleviating the fears of its growing influence. This might involve pursuing mutually beneficial agreements, respecting the sovereignty of other nations, and fostering an environment of collaboration rather than competition. In a nutshell, it's time for China to trade its big stick for an olive branch. So, there you have it. While China's BRI has been, for the most part, a failure, there's still hope for the BRI if China can adapt its approach and address the concerns of its partners. By increasing transparency, embracing sustainable financing, and fostering strong diplomatic ties, the Middle Kingdom could yet turn the BRI's fortunes around.